And this is what investors will have on their mind as they look towards Thursday. You know that Mario Draghi, of course, is expected to speak at the latest policy meeting of the ECB. Investors will be looking for clues as to the future of the quantitative easing program beyond December, as again the case weakens for more stimulus. On the other hand, he's widely expected to hang fire on that. They're also curious to see as to whether he will say something about the euro and the fact that it's been picking up strength, potentially hitting the inflation, potentially hurting the inflation targets that the ECB had set out, and also exports from the Eurozone exporting countries.
Right, Janelle, we'll sure look out for Draghi's speech on Thursday. Now, as the countdown to Germany's elections continue, anything new from the campaign trail and the televised debate that speaks to investors' outlook on the economy and the markets?
You know, there have been a series of debates in the campaign trail this weekend. On Sunday, of course, we saw the televised debate between the two candidates for Chancellor, Merkel and Schulz. And obviously, yesterday we saw a smaller debate among the smaller parties that could potentially be the coalition partners for what is widely predicted to be the ruling Christian Democrats of Merkel. Now, while Merkel and Schulz were talking, many investors actually missed a lot of topics that they were hoping to hear about from the candidates. For example, they didn't talk about the future of the euro. They didn't talk about deeper fiscal integration within Europe. They didn't talk about Germany's trade surplus or the fact that domestic investment has been flagging here in Germany. The only thing that investors said that they thought was of note in the whole debate between Merkel and Schulz was the mention of Dieselgate and the prospect of providing German customers with similar compensation that the U.S. customers got in the wake of the scandal. You know that German customers receive no financial reparation, just retrofits and upgrades. And that's in contrast to their U.S. counterparts who got a full package of buybacks, of repairs, of reimbursements, and the cash rewards. And that has something to do with how class action lawsuits are structured here in Germany. Now, both Merkel and Schulz said that they would start a review of these laws governing class action lawsuits. So that could be a potential game changer for the customers affected by the Dieselgate scandal. Now, of course, these statements aren't the same as new legislation, thus it would be too early to say that the automakers are facing millions in losses in terms of lost cases and class action lawsuits. But of course, these statements have now been made in the public arena. Everybody is listening, from consumer groups, from the auto companies themselves, from law firms, and of course, the affected diesel car drivers.
Now let's look at the other side of the Atlantic. How are investors and traders in Europe reading the news out of Washington regarding U.S. debt limit? Are bond investors worried?
Well, they have reason to be, let's put it that way, considering all that has to happen within this month for the U.S. in terms of that sort of legislation. So a budget has to be passed, the debt ceiling has to be raised, and aid for the victims of Harvey have to be released, and that's all before they go on to their main objective of the tax overhaul. So they have quite an ambitious agenda and just not too many legislative days in order to get that done. So we're in a situation now where the Treasury actually needs to issue additional debt, right, in order to be able to pay off its commitments from government contractors to bondholders. And the Treasury Department, of course, hit its limit earlier this spring, and it's been running on extraordinary measures. But of course, these extraordinary measures will only last it for about another month. So the bond market could take a hit if this uncertainty continues over what the U.S. will be able to accomplish. Now, you actually have some suggestions floating around that perhaps the bondholders should be paid off first, but that is seen as just generally fiscally irresponsible. You do have a responsibility to get those social security payments out. And even then, even if you do spare bondholders from the financial consequences of not having been able to raise the debt ceiling, failing to make good on other payments is just generally a bad sign. Like it would generally undermine confidence, and that would reverberate on the bondholders themselves anyway.
Well, thank you very much for your time, Janelle. Enjoy the rest of the day. And in the U.S., stock index futures pointed to a lower open today as geopolitical concerns surrounding North Korea's relationship with the West amplified jitters in market trading. Geopolitics has reared its head once again during the trading week as markets worldwide were on edge after North Korea launched its sixth and most powerful nuclear test yet. The news was met with condemnation from across the globe, with the G7 releasing a statement on Monday which says that the leaders condemned the new nuclear test by North Korea in the strongest possible terms, adding that the group expressed its solidarity to nations within the region for the consequences of Pyongyang's irresponsible behavior. Speaking of data, factory orders are set to be released at 10 a.m. Eastern Time, while the U.S. Treasury will auction 4 separate bills today. In Asia, the market closed mixed after cautious trade, after stocks tumbled and investors turned to safe haven assets on the back of North Korea's recent nuclear test. The Nikkei 225 declined 0.63%. South Korea's benchmark Kospi index revised slightly, gains made earlier, slipping 0.13% to finish the session at 2,326.62 after closing lower by more than 1% in the previous session. The Australian ASX 200 closed moderately higher, edging up 0.07% to end at 5,706. Hong Kong's Hang Seng index slid 0.05%. Mainland stocks were resilient. The Shanghai Composite gained 0.16% and Shenzhen Composite inched higher by 0.20%. Away from the market, the National Council on Privatization, chaired by Vice President Yemi Osinbajo, has approved the privatization of Afam power plants 1 to 5. The approval, which commences the first power facility privatization under the Buhari administration, aims to inject additional power into the national grid and improve electricity nationwide. Professor Yemi Osinbajo also granted approval for the immediate commencement of a fresh privatization of Yola Electricity Distribution Company. A review of other proposals presented by the Bureau of Public Enterprise for the reform and restructuring of various sectors of the economy was also carried out. And what does the improved GDP mean for commodity prices? Find out after the break.